Welcome back. I'm Pratap here. Today is 5th February 2024. In this video, let us evaluate the performance of daily and 75 minutes high liquidity zones we identified from our previous report. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action course, and all the training lessons can be accessible at our YouTube channel from this home page. Scroll down to the playlist supply demand zone price action course. Click on this playlist and all the training lessons are available here. You just scroll down and starting from lesson 1.1, all the videos are available in an order. I also provided the link to this playlist in this YouTube video description. By clicking on the link, directly you can get into this page. Even you can also access all these training lesson links at our Telegram channel. I also provided the link to our Telegram channel in this YouTube video description. So please also subscribe at our Telegram channel so that every time when we release a new video, you will be getting an update in the Telegram channel. Now let us get into our analysis discussion. In the last video, we have identified 4 high liquidity zones related to daily and 75 minutes zones. So let's evaluate one by one. The first one is Tata Chemicals. This is a daily high liquidity demand zone. If you look into this zone, inside the daily zone, we have a 75-minute zone. And it was tested already earlier once. And below that, there is one more drop base rally. Even below that, there is one more drop base rally. But I have fine-tuned only the bottom one, the bottommost 75-minute zone. Remaining two, I did not fine-tune mainly because the price structures are not good inside this zone. Let me show you. If I go to the 15 minutes time frame, look into the structure. All these candles are base candles. Or even if you want to consider this as a leg-in, even though small candle, still if you want to consider, already this zone is tested previously. Moreover, it is pierced previously. Let me show you. Previously, once prices entered into this zone. See here. When on 21st December it happened. So that's why this is not valid. And apart from that, the remaining structure is not good in this zone. And look into the one below this. All these are all leg candles. We have a leg candle, another leg candle. Where is the base candle between this? We have a drop candle, we have a rally candle. Between there is no base candle. That way this zone is invalid. It will be violated very easily. Just to show you, I have drawn. Even today also prices entered into this zone and closed inside this zone. See here, almost pierced. Here, just pierced. That's why this is also invalid zone. The only hope is in this zone. But anyway, we cannot plan a trade in this because now at present prices closed inside. Next time again, if prices go and again nearing to this zone, if our software list, then we can plan a trade in this zone. How we planned this zone? Here we have inside this 75 minutes, we have a rally base. We have a, this is not a great leg out, but see the follow through candle, ERC candle. This is the way inside 75 minutes. But this is not a clear structure because this is not a clear leg out, but there is a follow through candle is there. That's why I have given preference. The reason is to find the actual order flow inside this zone. Just want to find the actual order flow. So go to the 5 minutes, then you will get clarity inside that zone. So here we have a drop, we have a base, and we have a rally. This is the way we have drawn the 5-minute zone. And moreover, see here, previously prices were almost reaching this zone, and there is a huge rejection from this area. That means in this area, there is a very strong order flow is there. The order flow is very strong. That's why if the prices next time when they reach into this zone, definitely we can plan a trade. So this is about Tata Chemicals. We did not take a trade in this. And Burger Paints, very interesting happened today. But already we discussed about Burger Paints previously. This is a daily zone, drop, 2 base candles and a drop. This is a daily high liquidity supply zone. But actually yesterday it is listed even in a 75-minute zone also. That means the daily zone is a high liquidity zone. Inside we have a 75-minute zone. That is also a high liquidity zone. That's why this stock is listed in both daily supply zones as well as 75-minute supply zone. So what is the 75-minute supply zone? According to our software, the one that is there inside the daily supply zone. This is the one. Drop 1, 2, 3, 4 base candles and a drop. This is the supply zone. But previously we discussed about this zone. I told you there is no proper order flow inside this zone. Most probably it will be violated. But the only thing is I found 5 minutes inside this. There is a 5 minutes because 15-minute structure is also not good. But 5 minutes high liquidity I have identified. We have a rally, 4 base candles and a drop candle with a gap. You will get some more extra body to this. This is a ERC candle. See here, prices are entering and caving. Again, nearing to this. So that means a strong order flow is there inside this area. But here the problem is, okay, second time they are nearing to this, but previously already prices entered. But how it is going to work next time when it is entering into this? Is it really a high liquidity area? These are all some questions now. The only way, the reason we are giving is some rejections near this zone. But see, already once prices entered little deep inside. Why next time there are rejections from here? Maybe it could be a reason because of this. See here. There is another 5-minute supply zone. Probably this supply could be the reason for pushing this. So that is the reason why we didn't have clarity. We can't really plan the trade in this zone because it is a tested zone. And next time prices did not enter and came down at least multiple times. If prices going inside and coming down, maybe we may assume there is a high liquidity. But anyway, that is the reason why last class, I told you maybe this is not a good zone, not a comfortable zone to plan a trade. Hope you remember that point previously we discussed. That's why today we didn't plan any trade in this zone. But there is one more interesting point always I used to tell you. Let me remind you that point again. Most of the times these zones will be violated easily because we identified a reason. The reasons, not a single reason, multiple reasons. When a zone can be violated, if the structure is not good, price structure, the zone structures are not good, mostly the zones will be violated. In 5 minutes level, 15 minutes level, if you don't find proper structures, mostly the zones will be violated. This is what we identified and we have seen several times. We have seen several examples earlier. Zones are violated easily when price structures are not good. If price structures are good, most of the time, this theory, the prices respected the zones and they gave very good opportunities. Okay, that means this zone will be violated. But I provided one exceptional condition. What is the exceptional condition? Because these are all the high liquidity zones. If the price structure is not good, the zone will be easily violated except if institutions again decided to create a new zone inside this. Which new zone? The 15 minutes level. This is 75 minutes level. Below this 15 minutes level. Let me go to 75 minutes. So this is a 75 minutes zone. Drop, 4 base candles and a drop. Because the price structure is not good, this will be violated. If institutions don't want to violate this zone, what they do? Below one time frame, because this is a 75 minutes high liquidity, below one time frame is 15 minutes. They may create a new 15-minute zones. That because they created a new 15-minute zone, a fresh zone, that again push the prices down. But when we have to plan the trade, next time again when the prices retraces back into that zone, we will plan. At the time again we will check the conditions. The inside the 5 minutes, 15 minutes, if the 5-minute structure is good, then we will plan. If the structure is not good, again we will tell that newly created also will be violated. But today, institutions created a new 15-minute zone inside this 75 minutes and then they pushed the prices down. So let me go to the 15 minutes time frame. When they created, today they created, see, today when the prices entered into this zone, please observe carefully. See, the next candle, prices entered into the zone. See here, prices entered. Here two conditions will happen. Further prices will go up and this zone will be 75-minute zone will be violated because the price structure is not good. What is the second condition? Institution after this leg candle, this is a leg in, they create a base candle. See here, they created a base candle today. This is a leg in base candle. Which base candle? 15 minutes base candle. And then they created a 15 minutes leg out candle. So we have a rally, base and drop. So that way institutions created a new supply zone. They created a new supply zone. Rally, base, drop. Like this. That's why there is a push and reached the 15 minutes target. We have a 15 minutes target here. I am considering this as a leg in ERC candle, base candle and a rally candle. And reached the target. But we can't consider this target. The reason is we didn't plan a trade here because the price structure is not, we didn't plan a trade. Because institutions created a new 15 minutes demand zone, pushed the price till the next 15 minutes. Sorry, institutions created a 15-minute supply zone, not demand zone. Sorry for my mistake. A rally-based drop, institutions created a new 15-minute supply zone. They pushed the price till the next 15 minutes demand zone. That is the target. That is institution's point of view. But what about us? So we will plan a trade next time again when prices retraces back into this zone. Okay, when you want to plan a trade inside this, the structure should be good even 5 minutes level. So that's why let us go to the 5 minutes time frame. See here in the 5 minutes time frame, we have a drop candle, leg in, two base candles and a leg out candle here, ERC candle. After that, prices moved down. So here we have to plan our trade where at 573 rupees 40 paisa. That is our entry. And what is our stop loss? The high of this candle, out of these two, the high. The 574.25, maybe you may add some stop loss buffer a little above. So this is our trade plan now. Then what is the target? The target is going to be the 15 minutes target. When prices enters into this. When price will enter into this zone. Maybe tomorrow, maybe day after tomorrow, or maybe some other day. If everything is good, today itself it may reach. That possibility is also there. Exactly that is what happened today. The prices again reached into this area today itself. After it touched the target, it is pierced, and below there could be a strong order flow. From this we have a drop, two base candles. The order flow started a little above this demand zone. Another 15 minutes demand zone, you may draw like this. Just before entering into this, see the rejection here, huge rejection. That means in this area demand is very strong. But anyway, our target is going to be, this is the one. Even though it is pierced, the reason why we are keeping this one as a target, the reason is already market timings are going on. See, the time when it reached, it is at 10 o'clock 5 minutes. Next time when it reached to this level, it's almost at 12:30 or 12:45 it reached. Let me show you. So this is the area, the 5 minutes area, inside 15 minutes area. That is our entry. So this is our entry. Now in this candle prices reached. What is that candle? At 12:15 it reached the entry. That's why we will limit to this target. This itself a huge target. Now we are looking into the 5 minutes time frame. If you want me to look from, because entry we are taking at 5 minutes, but target is 15 minutes, because these are the high liquidity zones. But see how it is holding. There is a strong order flow. It is holding the prices, not letting the prices go. Actually, prices were struck here for some time. The reason is institutions continuously created 5 minutes demand zone. This is the first drop base rally. Again, rally base rally. They created multiple 5 minutes demand zone. That's why the demand is very strong, but supply is also very strong, because institutions created a new supply zone inside the high liquidity zone. And all these are all not normal 5 minutes zones. Normal 5 minute zone cannot fight with high liquidity zone area. Maybe some time it may fight. After that, because there is a high liquidity, it will consume all these orders. That pending demand, the pending supply inside the high liquidity area will consume all these new demands. So it took some time and pushed the price down. Again, prices entered into this demand zone. Again, it pushed, but again, the pending orders inside this high liquidity area further pushed the price down, because it is already a tested demand zone. Next time, easily it is violated. But below that, there is one more demand is there. See, when this price entered into the second, the below demand zone, see the rejection again here. Prices went up, but in this high liquidity, it closed near to that. But already institutions created a 5 minute zones here. And the pending orders in these 5 minute zones again pushed the prices. But anyway, this is what price action happened in between, I am explaining you. But our concentration is where we took the entry. We took the entry at 12 o'clock 15 minutes candle, the 5 minutes candle. And finally, when it reached the target at 2 o'clock 55 minutes, 5 minutes candle, it reached. Almost close to the closing hour, the last half an hour, it reached. So that is the reason why we can't look for the next target. See here, again came, but almost it is in the closing hours of the market. That's why we can't take the risk. We need to exit here itself, even though this demand zone is pierced. Sometimes you refer pierced demand zones only for the target point of view. Earlier also I told you, pierced zones you can use for targets, but you cannot use for taking the entry. And this is the way Burger Paint has given a profit 9,636, which is 7.2% ROI as per one futures lot margin cost. See, this is a very interesting example. Most of us might have ignored this stock. Anyway, this zone is going to be violated. Don't look into this stock or completely ignore this stock. This is the way we might think, but that should not be the case. You have to wait until the zone is violated because there is a possibility. What is the possibility? If institutions decide not to violate this zone, what they do inside the zone, again they create a new zone, the 15 minutes level, because this is a 75-minute zone. They will create a new 15 minutes. See, the perfect 15-minute zone they created today inside the 75 minutes. See, this 15 minutes and 75 minutes high liquidity, they are confluence, zone confluence. They overlapped. Now within this 5 minutes area, we identified this 5 minutes area and again 75 minutes area overlapped. That is what zone confluence. The 5 minutes is there inside the 15 minutes, the 15 minutes is there inside the 75 minutes. Inside means overlapped. What I mean is 5 minutes is overlapped with 15 minutes, 15 minutes is overlapped with 75 minutes. That is the way we always plan our trades. This is a fine-tuning technique, fine-tuning the zone. That setup, fine-tuning the trade setup we are using. All these days we are using the same setup. Because I explained in these concepts in lesson 16 recently, probably you might have understood better in a better way because there is a clear presentation is there. But all these days, last 3 months, we've been following the same technique for all the high liquidity zones. If you would have observed the last 3 months videos, same thing we are doing. That's why it is a very important technique. That's why I told lesson 16 is a very important session, especially the practical session of lesson 16, 16.2 if I am not wrong. So what I am saying, people generally they would have ignored this stock. But see what happened. Why we have to monitor all the zones? Even though we know they will be violated, but you have to monitor till it is violated. Because there are chances that institutions may create a new zone. Within the same day, again, prices retraces back. We should not miss that opportunity. Because it is a fresh zone created recently. And a lot of order flow will be there inside this zone. So we should not miss an opportunity. That is what happened today. Except this, no other stocks today provided the trading opportunity. Okay, next one is HDFC Bank. HDFC Bank, narrowly we missed the trade. Narrowly. Just maybe a 50 paisa difference, 50 or 60 paisa difference. So this is also a 75 minutes high liquidity zone. Actually, HDFC is moving between 75 high liquidity demand zone and 75 minutes supply zone. It is moving between demand and supply zones. Last Friday, it provided a short opportunity. And today it came very close, but missed the opportunity. It couldn't reach the target. Overall 2 rupees difference is there from here to here. But let me show you before that. This is a 75 minute zone. Actually, there is a LOTL zone is there. There is a 75. This is entire thing is a 75. Inside this, we have again a drop base rally. This is another 75 minutes. LOTL concept within 75 minutes time frame. One 75-minute zone is inside another 75-minute zone. LOTL concept. That means they are overlapped. Now inside this we identified a 15-minute zone. Let me go to the 15 minutes time frame. We have multiple, this is a drop base rally. And again rally, 1, 2, 3, 4 base candles, again a rally base. That means we identified two 15-minute zones inside this. Again within inside 15 minutes, we fine tune to 5 minutes level to find the real origin. Mostly we identify the real origin, that means the order flows at 5 minutes level. See here, maybe if you consider this as a leg candle, because the range is good enough to qualify the leg-in candle, and then we have two base candles and a rally candle. That way this is one zone, and other one is we have two more zones inside this. Drop base rally, again rally base rally. This is the way, these are all 5 minute zones. That means there is a strong order flow is there inside this area, within this 75-minute zone. That's why expecting prices to enter into this. But what happened? This is around 14,000. See, you can take week to week also, consider, because the risk is very minimal if you take type 1 proximal. That's why you can plan, type 2 proximal is very minimal, very minimal. There are higher chances we may miss the trade. That's why you can plan week to week because the risk is within the limit. The RR is within the limit. Even that way you can, even if you would want to plan like this is at around 1432.25 paise. But see the low of this candle today. 1444. This is high of this candle, 1432. Sorry. That's why I'm wondering why there is a huge difference. Not here. The low of this candle is 1434.05. Here the high of this candle is 1432.25 paisa. So that means approximately 1 rupee some 70 paisa gap is there. Generally, if you add the buffer, what you do? 0.1%. 0.1% means probably you will use 1 rupee 40 paisa. So that's why I said with a margin, even if you add some buffers for our entry price, if you add some buffer, still marginally with few paisa it missed the trade today. Very narrowly missed. Otherwise, it would have reached the 15 minutes target. So here, the 15 minutes target is somewhere here. Narrowly we missed. So that's why I'm not considering, just I'm telling you how we missed the trade in this. Came very close. It's a very close call, but just missed it. Otherwise, this would have been another successful trade for us. Okay, this is about HDFC Bank, how we fine-tuned the zone but missed the trade. And next one is Tata Steel. Tata Steel it was just flying today. We didn't get a chance to get an entry. It never entered into this zone. This is a 75-minute zone, Tata Steel, 75 minutes. Below that, we have a daily high liquidity zone. Previously, once we got a trade in this zone. I think in this candle, we got the trade previously once. When it was, I think it is in December 20, we got a trade in Tata Steel. So this is a 75-minute zone. We have a rally, two base candles, and again a rally candle. And how I fine-tuned? See, why I'm showing you how I fine-tuned? Just to help you people to gain your experience. Those people who recently completed lesson 16, all these are all examples for you for fine-tuning the zone. See, 15 minutes we have a drop, four base candles, and a rally candle. So within this 15 minutes, we identified a 5 minutes. To the 5 minutes, we have a ERC candle. This is a leg-in candle, and three base candles, and a rally candle. Type 2 proximal level, we have fine-tuned the zone, the 5 minutes time frame. But prices did not enter today, so we didn't get the trade. So this is about the analysis part of what we plan, the high liquidity zones we generated in the last Friday. And today we got the entry in burger paint because a fresh 15-minute zone is created today inside 75 minutes high liquidity. That fresh 15 minutes again prices retraced back. That way we got an entry today. That is the important point. Actually, it is a good lesson for you. Burger paints is a very, very good lesson. Always I tell, if the price structure is not good, the zone will be easily violated, except institutions decide to create a new one time frame below, one lower time frame below the zone. If they create, probably the zone won't be violated, and again that will help us to provide a trading opportunity during the next retracement. This is what several times I told in the earlier videos. Especially when a zone will be violated, I explained in that video, I clearly explained this point. So this is about today's analysis discussion. Probably late in the evening, I will be generating the other reports, that is stocks near demand and supply zones and the bullish and bearish trade setup. Separate videos I will be releasing. But remember, I'll make sure they will be available to you by morning 5 o'clock. Or sometime a little early also I may release. Okay, thank you all for attending this video. Let us all meet again in our next video. Have a good day.